What's going on with the YouTube fam? What's up? What's up with it? What's up with it? Yo, wherever you are while you're watching this, whatever time it is, wherever you are in the world, I pray that God blesses you. For me, it's Tuesday, January 7th. And today, we're gonna drop some sauce on how you can use supply and demand to quit your day job in 2025. Supply and demand is what helped me escape the corporate plantation. This is how I became a profitable trader. And on the charts, we're going to go to the charts. I'm going to mark up the charts, and then I'm also going to show the breakdown of the trade that I took today that netted me about, across 3 different accounts, netted me about $18,000. So let's go back. Let's lock in. Go ahead and grab some snacks, grab some corn nuts or whatever, some chips, some water, whatever you like. Let's lock in. All right, so you can see here, I like to start top down on a daily, and this is a fresh chart, so you can see the sort of process that I go through. So you can see we got some resistance right here. This is resistance because in this area, price failed to break. We did dip below, but then we jumped back up, and then now it's support. Because we're on a daily, I like to use black on the daily. So you can see price is hitting this break in the retest formation right there, and then we have another set of resistance right here, and yeah, you feel me? So that's what we're looking at. I also like to put it down here because these are supply candles right there. Supply is at the top of the market after a massive push to the downside. So it's the first bullish candle before a giant push to the downside. That's what classifies supply. What classifies as demand is just the opposite. It's the first bearish candle before a bullish push to the upside. That would be demand. Okay, so let's move over to, I also like to check the 4-hour to see where our supply is, and I usually tabulate or mark up our supply zones on the 4-hour and on a 1 day with support and resistance line. So my green is 4-hour, my black is 1 day. I do typically pay attention to the 1 hour, but not so much anymore, because the 1 hour has a lot of fluctuations. They happen typically towards the beginning and the end of the candle. So in between is really easy to get faked out if you pay too much attention to the 1 hour. But from the 4-hour, it's something similar, but you always know where price is heading, because if we're bearish, then we know price has to come and get supply to be more bearish to melt, right? If we're bullish, you know price has to come to demand area over the long term to go up. So I don't take my trades based off the 4-hour, but I do get my daily directional bias off the 4-hour. Now the 30-minute and the 15-minute is typically where I like to mark up my zones. And you can see when we go back to the daily, you can see how we're very bearish and we're rejecting off of this level. So this is actually, I think, yeah, this is actually the 3rd. So this is the 6th right here. This was yesterday, Monday, January 6th. So you can see we bounced off of this supply zone right here on the daily, and we were going up and we crashed back down. Now we have a doji or morning star, either one. That is a reversal pattern. So the move was going up and then rejected off of supply. So that means we're reversing to the downside. That's what it looks like, at least. You got to stay patient. You got to stay focused. So you can see, if I was to mark up my supply zones on the daily or on the 1 hour, sometimes I typically do this. I mark off the daily high from yesterday, and you can see how we dumped out of the daily high yesterday, and I think price just kept going down pretty dramatically. Like, this is a very huge move right here. So if you caught this move, congratulations. I think I lost like 2% on Monday, which is a pretty big loss, but it is what it is. So we have our daily highs here on the 30-minute from yesterday. We're just gonna mark it up. I'm gonna mark it up just like this is yesterday, right? So I don't necessarily need to mark these up because they don't always typically hit yesterday's swings. So as a matter of fact, let's just zoom through. I'm gonna go to the hour, or I'm gonna go to the 4 hour and push through, and we can in retrospect. This isn't really back testing. This is just showing you how I'm marking up the charts. If y'all want me to do back testing video, shoot me a comment. I'll show y'all how I back test. Back testing is super important. I recently realized every now and again you forget and you sort of like think you don't need it because arrogance and ego, but make sure y'all back testing, like once a week. You know what I'm saying? Make it a part of your routine. Create some sort of routine around back testing and make it a normality because it is super important. So what time? This is 7 o'clock, right? So again, I say this all the time because I want y'all to understand this strategy works based on what time of day you're taking your trades. For me, I'm on the West Coast, Bay Area. You feel me? Yep. So I don't take my trades until 9 a.m. Pacific Standard Time, which is like 12 o'clock on the East Coast. It's pretty late on the East Coast, but for me, it's right before the second 4 hour candle of the day starts. So it's a lot like trading 9:30 open on the East Coast. With just depending on what type of day we having, it could be less or more or the same type of volatility. So that's why I trade that window specifically. And that's some sauce too. Like, a lot of people ain't gonna tell y'all that. That information costs a lot of money. I ain't even gonna lie to you, bro. I didn't get that information until I start buying courses. So keep that in mind. So here we are on 30-minute. Now we have some. Wait, why did it just? Okay, see now I just gave a little bit away. Let's go back a little bit actually. So we keep our eye on the prize. You feel me? So on the 15-minute, so on the 30-minute, we do have a 30-minute demand zone right here. And it's probably going to be confluential for the 15-minute. So if you are trading at market open, or at some point, if you start to look for your trades at market open, you could have got yourself a really sweet position right here, right there, because we came and we tapped into this supply zone and rejected immediately. And that's a really good move. That's like maybe 2,000 or 200 point move. For me, that would be a 4-to-1. You can see there is some confluence. This is what they would call an order block right here, but this is just supply. I think this is a breaker block. Correct me if I'm wrong. I don't trade that strategy, but I'm pretty sure. So we have consolidation right here. So if you were trading at this point, this is where you would want to get in, and this is where I got in my trade right here. You can see how, and we can skip back so we can see it very clearly what's happening here. So we created this drawdown like this from London. We went to a high. What price likes to do is, in London, it likes to go in one direction, and this is US 30. Just a reminder, right now I exclusively trade US 30 or Dow or YM for futures. And what it typically does in London, it likes to move one direction, and then in NY it will move the opposite direction. So London will grab liquidity or tap into some daily level of supply or demand, and then as soon as the market open, here we got 7:15 or 7 o'clock candle, it makes its move. Sometimes it waits it takes a little bit longer. But today we had high impact news, PMI, and JOLTS. So pretty much almost immediately we got the move that we were looking for. So then we got our charts. We got a 30-minute supply, confluence with a 15-minute, and then here you can see there's another 5-minute supply that just perfectly got respected, right? So at this point, this is too soon for me to get in my trades, but if you were trading at this time at 7 o'clock, you would have got yourself a really nice like 4-to-1 RR, depending on how you trade, but this is definitely 200 points or 2,000 pips. So, but the way that I'm doing this, so you can see how we had this break and a retest. That's all we're looking for, right? We're looking for a break. A break is classified by when you reject off of a key area and create supply or demand, depending on the bias. And I like to identify them by engulfing candles. We have one bullish candle here, followed by an engulfing. That is automatically a supply setup being created. And then we have a second one, and then this massive push to the upside makes it seem like it was a fake out to the downside, but really it's a retest. So when we get that retest, we see this nasty dump, and as soon as you see the price moving aggressively, you can get in like right here. For me, this is where I probably would have got in right there, and I would have set my stops. All my stops are programmed to a certain amount. We right above this area. I know a lot of people probably will want it to be above here. That's cool too. It's perfectly fine. But for me, I like for my candles to break the previous candle, and this is why. Because if you're waiting for it to come back, you just missed out on this trade. You can get in right here, but a lot of the times it'll come back up here, stop out first, and then come down. So this has some risk to it. Getting in and break a candle has some risk to it. However, there is some confluence. There are some pros and cons. It's just these are things that as a trader, once you're in the midst of trading and you're fine tuning your strategy, these are the things that you're going to have to decide what's best for you. But ultimately, sticking to whatever plan that you establish for yourself, that you identify as best for you, is going to be ultimately the thing that makes you the most money and the most ability to free yourself from the corporate plantation. Do you understand what I'm saying? I know you do. So let's keep going. So for me now, I want to see where price is going to reject from, right? So we always got to mark that too. If you look at this hour candle, we have a lot of support right here. We have demand also on the hour. Let's take it on the 30-minute, because that is usually more precise. Right here is yesterday's market low. We can mark up our absolute lowest point from the previous day and our absolute highest point from the previous day. It won't always respect that, so you got to be careful. But marking it up is better than not marking it up, because sometimes it will, especially a lot of the times it will, especially when there's high impact news, and especially if it's trying to push in a direction. You can see we have the market high right here. It didn't come back up there, but we had a market low. It's going low, so it's going to come back. It's going to come down here, and it's going to reject and going to return right back down there. So if you go here, you can see we perfectly respected that. So now what I want price to come back up here in this area, and that's where I want to get into my trades. We do want to be careful because this is liquidity drawn right there, right? So we can come back up here. So you're never going to be able to do this perfectly, but I promise if you use patience, these are my pillars that I use to trade every single day. It's patience, execution, discipline and conviction. If you're constantly thinking about those 4 points, you will have a better chance at winning. And fine-tuning your strategy around those will give you a better chance to be profitable and be consistently profitable. So now I want this to come back up at some point. We're going to come back up at some point. If it doesn't, we want to create structure somewhere to where I can get in. But you can see we had this nice solid break and a retest off of this demand zone. Very nice, very solid. So look what time it is. It's 8 o'clock. We starting to do some stuff. So we created demand down here, and this is how volatile this is. I know a lot of y'all is probably like, why didn't you get in these trades? Look, man. Look, I'm gonna tell you like a player told me. Nobody told me this. I learned on my own. But sticking to the script is way more important than you will realize. You're gonna see your setup all the time. But if you create a script and you stick to the script, that is how you become disciplined. And discipline is how you become profitable. So don't take your setup when you see it outside of whenever you're supposed. If you say you're going to do it, do it. Don't do it if you didn't say you ain't going to do it. I learned recently that confidence is confiding in self. And what does confide mean? It means to trust. So if you don't have confidence, you don't trust yourself. And you don't trust yourself because you keep lying to yourself. You keep breaking your word. And not breaking your word takes discipline. So discipline yourself, keep your word to yourself, and you will find profitability. That is the key. That's a gem. I don't have a lot of them. I don't drop a lot of them all the time. You understand what I'm saying? But when I do, please believe it's going to be worth something. So you can see how we're popping back up. We're creating liquidity here too. So if we move up out of this area, it's very high likelihood that we come back down here because we did not tap into this 5-minute demand that we created down here, which is now our daily lows, right? You following me? I know you are because you ain't slow. So you can see what price is doing. Now we tapped in. We move up with aggression. Now all we looking for is for price to respect. What time is this? Okay, so this is actually starting to get in where I got in. All we was looking for right here is for price to respect the highs. And you can see I was actually doing this too. You can see we created demand on the 5-minute multiple times. And look, I'm talking too much and I missed where I actually got in at. We created multiple times and we came back to respect it every single time. And that was the difference. This is supply, not demand. That was the difference. So on any other day, I might have missed these trades, right? Because I was just waiting for confirmation over and over again. And we also hit one right here too. And I definitely mark up all of these. And this is experience. If this is too, we'll clean this up at the end of this so you can see the trade that what it actually looks like. But for me, I mark up everything. I don't let it slide, and I start to get rid of them once we start to break and move out of them areas. I even mark them up on the 15 as well and the 30-minute, but you can see we don't really have much going on here yet. There's a huge 15-minute candle that is now technically supply. And when you see stuff like this, these big candles being engulfed, you know you in for some huge movement, because at some point the moves are going to get bigger and bigger and these candles are going to get smaller. They look big now, but they're going to end up looking really small. So we was at 8 o'clock right here. I believe we came back up one more time. Yeah. So it's fully respecting supply and both. It's respecting both. We came back up one more time and I got in off of this rebound right here. And let's see, where was it? Yeah, I got in pretty much right there. because we came down and I got in like right there. I usually wait for the engulfing, but we had our engulfing right here and we came back up. So as soon as we start rejecting, I think it was a little bit more down. Or no. Actually, it was more high. It was high right at this. So we broke this candle. And here's another thing that I do. When we have this engulfing structure right here, I might miss it because I'm expecting us to come back up here, right? So I might miss it. I let this go by. It was 850 also. So it wasn't really in my trading window. Now, all I got to do is wait for it to come back and tap into that zone. Once it taps in, I'm clear. So we have this engulfing and then we have our tap, and that's why I got in. This is completely still within my trading rules. As a matter of fact, this is more of a trade. This trade has more confluence than just entering in right here. So now we did do a little bit of dance, a lot, I think, and then it started. I think it took off, right, and then it came all the way back, I believe, at some point. Gave us another entry about right there, and then we out of there for the rest of the day. And then you can see we demolishing these demand zones for the most part. And yep, I think I got out at like 4-1 or like 4.5-1. So we got out somewhere right here, and I think it was like right when we started to reject, because on the higher time frame there's some level of there was some level of resistance right here that I spotted. I think it was on the 4 hour. Basically right here you can see there's a level of resistance right there. So I pretty much got out right there, and that was today's trade. And that's essentially how supply and demand works. Really supply, because it was a bearish day, but this is essentially how it works. And it once you get the mechanics down, you can start to rely more on, you can rely less on the technical analysis, more on a strategy that is personally cultivated by you, with help from somebody like me that suits your trading style. And that is what takes the emotions out of it more than anything. Okay, so when you're trading the way you want to trade, you can certainly be less emotional, and that minimizing the emotions will strengthen the psychological aspect that you trade with on a daily basis. So you want to have strong psychology. You don't want to get washed out of trades. Whatever it takes to not be anxious. The Bible says be anxious for nothing. And it says, but instead pray and bring all your anxieties to God, and prayer and supplication, make your requests known. So don't be anxious, just pray. And by prayer, I don't mean just getting on your knees and asking God to help you. I mean, getting on your knees, asking God to help you, but put in action, put in repetition, put in training, putting discipline behind your prayers. That's what prayer truly is. So this is, I hope this helps somebody. I hope this encourages you to keep going forward. Once it becomes easy, you're going to start seeing the fruits of your labor, and you're going to start seeing like, man, I put up with this. I put up with this goofy a supervisor every day who got this crooked wig, or this dude who every day spill spaghetti sauce or whatever's in the cafeteria on his shirt trying to give me orders. You got a stain on your shirt, bruh. You can't give me direction when you can't even put food in your mouth properly. I'm just yapping right now, but it's real because that's exactly my experience when I was working. A crooked wig lady and a messy shirt dude that was fresh out of college trying to tell me what to do when I've been doing my job for like 10 years. So you don't have to deal with that, bro. And for some of y'all, your experience is probably worse. But if you learn a high income skill, you can become self-sufficient, and you can become truly independent, and you can truly be free. And for me, trading has, as stressful as it is at times, I would not trade it. I would not go back to working. No way. Absolutely not. I enjoy it. I enjoy trading. I enjoy statistics. I enjoy the numbers, but I definitely enjoy the upside and the potential. So I'm praying for y'all. I love y'all. And I hope that 2025 brings you peace, abundance, prosperity. Start healing some of them broken relationships, and returning back to the one who saved you, Jesus Christ. So, like this video, subscribe, talk to me in the comments. You know I'm gonna talk back at you, bro. I love y'all. Peace.